Hey, okay, we're gonna go through a video where I'm gonna look at a lot of stocks that I'm looking to buy long term. A lot of these stocks I want down a lot more. Some of them I might be looking at right now to buy, and then some of that I might be like, okay, these are elevated, we need pullback. So we're just gonna go through a little bit of a list that I made right here. This is not financial advice, please do not buy you see anything or trade to see anything here in the video. So if we're just gonna be EL ticker symbol. Estee Lauder, this is a makeup company. Their biggest demand is in China, and their demand has been dropping. That's why you see a lot of this pullback right here, along with a lot of the other makeup industry sector stocks have been having pullbacks well too. So we're at $91 right now. I kind of do want to get this below 80, like the 79 area. So I'm gonna put a green level here. This green level doesn't mean I'm looking to buy at this level. It's like, whoa, when it hits that level, I'm gonna buy. No, most of the time I want it below this level. If I could get EL below to like the 74s, that's when I'd be looking at for like, wow, I really need to buy this. Even into the 60s, I'd be like, wow, I really need to buy this right now. But like, it's still at pretty good prices right now compared to its all-time high in January 2022. Because during COVID had a big push up right here, a big boost because a lot of people were buying like high-end products, and all of these high-end companies started booming in COVID. So I am looking for Estee Lauder as a buy soon. Now Ulta stock, I have bought into Ulta stock already. My average is down here. Before Warren Buffett bought Ulta like a few days after I did, and then obviously his buy pushed it all the way up, and now we've been having like some more push and then retracements, and we're kind of in between earnings calls right now. But yeah, definitely can buy more Ulta if it drops below this 320 level or to around the 300s and below. That's when I'll be looking to load up on more Ulta. But for right now, I'm pretty okay with what I have and my position in it. PayPal's been pretty low ever since the beginning of the year. Really, remember the beginning of the year is when we had that low around $50, and that was kind of recovered back up to $81. They are like a pretty big company actually, and they do own a lot of other financial like institutions like Venmo and so forth. But PayPal, see how it had a big boost, especially during COVID, because people were like sending money through PayPal and Venmo and doing other types of transactions. Had a big boost all the way up there, and since then it's kind of fell back down to the downside. But this year we've seen some phenomenal growth out of PayPal, and they're still at low prices. At their low from the beginning to November, trading at now, they're up 60%. So still pretty good, and they might have a lot of room to go as well. So we're kind of just waiting for a pullback on PayPal. Hopefully we could get it below 74, and that might be another buy. If we go to Disney stock now, Disney stock also has some low evaluations to what it has been historically. You see how they had a high here in 2000, and they came down right here and actually recovered back up to the upside, and then they crashed down, not hitting that low again quite, but they obviously had another crash in 08, and then obviously having a great bull run. So don't not gonna say that Disney can't stall out for a while, but they are down considerable to the all-time highs. At least all-time highs to where they're at now is 53%. I bought them down here at 92, so around $88. So we'll see. I would like more Disney to around $80, maybe even below $80 is when I'd start getting interested in buying Disney again, or if they're gonna like swing shares to the upside. But for longs, like buy and hold for the rest of your whole life, that's what I'm looking for on Disney. Nike, also down pretty much long term. You see how they had phenomenal growth over here, and then during COVID, once again, a lot of these fashion brands started getting really elevated, and we've had some pullback right now. So they're trading at a fair value price. We bought in here during the winter or summer Olympics, and obviously they've had some nice push up. I'd like Nike below $70 into the 60s. That's when I would love to get more Nike. Keep it very simple. Dell stock, I really like Dell as a company. I think that they make phenomenal hardware products, and they've been doing that for quite some time. So they've been on the stock market since 2019, and they IPO'd at around $25. So they're at 125 right now. They had a high of 180. But they have good financials and stuff. They're multi-billion dollar company. I'm looking to get shares. If I could get another pull down below, I kind of wish I meant to buy here too, around this 90. I wanted it below 100, and that's exactly what I got. So if we get below 100 or below 110, I might be getting some shares of Dell because I think they're a very good company. Starbucks, bought some shares on Starbucks as well. And I bought shares before this last earning call. So around here, I bought shares somewhere in July, and then obviously they had their earnings call and their CEO changed, and that boosts them up. This is when their CEO changed, and that boosts them up. It's kind of been stalled really, but doing my supports and resistance levels. So if they have some more pullback, around the 70s or 60s, then I'll buy them again. But compared to where they've been historically, a great growth company, it wasn't a terrible level to buy at down here, right? So that's what I was looking at. Starbucks. Let's go to now the bond market, like some yearly holds, a little bit more, like 4 years out, or however long it takes to get us out. This is TLT, the iShares 20-year Treasury bond ETF. So with interest rates potentially coming down, already 50 basis points right now, and hopefully more in the future. We got shares of TLT and TMF is 3 times leverage. I'll show you that in here. And they're actually having a nice down day, so I've actually bought more in here because the interest rates got cut. I forget where. I think in here somewhere, and then they came down again. But that's because the yields they're still going up. The yields haven't really turned over yet, so the yield curve kind of turning over right now. So about a little bit more of TLT. TMF is the 3 times leverage of the 20-year Treasury bonds, and so that could also have a very high gain. You see the high was 600 right here. We're at $52. This is 3 times leverage, so you get a bit more money if it keeps going up 3 times, but same on the downside. So once again, we bought in here on TMF, bought more throughout here as well. So let's get to Charter Communications. I just saw this stock the other day. Apparently they're in 40% of U.S. businesses and households as a direct communications cable, like all types of different communications and telephones and whatever stuff. I think the leading brand is named Spectrum, so they might have channels as well. So they're pretty far down. Their last high was August 2021. I think they got a nice boost up, right, because of COVID and stuff. But yeah, they're pretty far down comparatively to what their growth has been. So I'm looking at it right now. I would potentially like it down to the 280s, but I might be willing to buy some shares here soon because it is holding my support of 316. I'll be looking at this support as to where I should buy shares or not. Another one, Lululemon. Lululemon at pretty low levels, or for being a growth stock, we're down back to levels that it hasn't been at since May 2022 and all the way down to February 2020, right before COVID. So they've been having some nice growth in the past couple months, having a low here. Looks like we could be reversing, so might be looking to get more Lululemon on the upside. I kind of want to start a share, maybe have some pullback down to this 260 area. I could be getting shares, but also at some fair prices to where it's been continuously. Topgolf, Callaway brands, having some overall growth. It's been around for a while and it kind of gave it up and went up again and it kind of gave it up. So I'm not really too sure about this, but I have to see where they find support. But they do have potential for the upside. I can kind of skip over this one actually. Dollar Tree obviously coming down. I think that a lot of the demand, a lot of the people going to these stores has gone down, but I don't know if they're shutting down a lot of stores, and that demand could potentially definitely come back. They definitely have pretty good financials as well. So crashing off the last earnings. So I kind of want Dollar Tree and Dollar General, obviously Dollar General as well, below 60. That would be very juicy in my opinion. Dollar General, ticker symbol DG, also dropping a lot off that earnings. If I could get them below 60 as well, I think I would really like that. Let's go to Baba. Baba obviously boosted up these past few days because of the China stimulus package that they've been handing out. So a lot of their stocks are recovering. They're basically printing money. So China's printing more money. A lot of the China market's been going up. Baba, compared to where it's been, had a crazy bull run right here all the way up to 340, trading out around $100 per share. So they're having some nice pull down right now. So we have two supports. I could probably get more positions in right here because we bought around here too, but we want more positions probably around there because I think that they could be doing good in the future. Target's to where it's been before. It's a great growth company. It was actually down all the way to almost below $100. We really should have been buying around this 100 areas because it hadn't been there since 2019, and so it could potentially still be at a great buying level. I'm actually looking for that. I did break our resistance right here at 157.80, and obviously having a nice great day green. So we can actually see target actually to the upside. Why don't I change this resistance? This resistance now is 164. So 164 is our new resistance there on target, and I'm gonna actually change this support as well. This support here is now 157.75. As your two support resistances, see that target kind of wants to go up this way, so that might be actually probably not swing call options. I wouldn't do that on a company like this, but could be good to start looking at that for some shares and stuff like this. This is an interesting one. Walgreens is down to $10 a share, and wow, they were a phenomenal growth stock at one point, and obviously they started having lots of problems throughout that, which caused the huge downside on the company. If you actually go right here, Walgreens is closing 1,200 stores over the next 3 years, 800 more under evaluation. So they might be closing 2,000 stores over the next 3 years. Is that good for the stock? I don't know. This person says it's good for the stock. I don't really know. All I know is that Walgreens, I don't know how bad it is, but their stock is trading cheap compared to where it's been in the past. And they actually had earnings today, and it boosted up the stock. So they were trading at $8, almost $7, and they had earnings today, kind of boosted them up. So I actually do have this one on my radar. I just want to learn a little bit more about the company and what their plans for the future are really. So Spotify is an interesting one because guess what? It's super elevated, and it's only been on the market, since May 2018, but something about Spotify is very interesting. I was looking up what percentage of the world uses Spotify. It's 35%. And I also looked up what is the world's most used music app. It's Spotify. So Spotify owns 30% of the music streaming, over 30% of the music streaming of the world. The second, who comes in second place, I looked up, it was a chart. It was Spotify, YouTube Music, Pandora, and then other stuff. Apple Music was number 9. And then iTunes, I think, because I still have that, I don't even know, it was number 10. But there's a few more between those. Samsung Music. But Spotify owns 30%. The second, YouTube Music, owns 9%. And the third, Pandora, I don't really even know, 1%. So 10% compared to 30%. That's why you're seeing a huge up movement on Spotify right now. Because I think a lot of people are starting to realize it's not that they have a monopoly, but they have a big growing market share position on music streaming, and it ain't going nowhere. Everyone loves music. I'm a producer. I love music. I love music with my whole heart. I've been producing it for 7 years. So even though I use Apple Music, I think Spotify could be a good stock for growth well into the future. So Tesla, obviously they've been bearish since November 2021, and there's a lot of things to say about Tesla. You know, a lot of people think that this is going to be the world's best next automation AI company, and it's going to take our world to next insane levels and stuff like that. Obviously, they had phenomenal growth throughout 2019 to 2021. Phenomenal growth. But that's pretty much what I see on Tesla. I think if I could get it below 170, I think I could buy more shares. I do have shares on Tesla. I forget where I bought them, but I'm definitely up right now. I think I either bought them here or in here. I forget where, but I definitely bought shares on Tesla. They might even be down at the 150s, but I definitely have shares on Tesla, and they're definitely up quite a lot. So I want to get more Tesla. And then another one. This is an insurance stock. I want to dabble. I do dabble in insurance stocks because pretty much all of them have like phenomenal like value growth throughout the years. Basically, they all almost look like a Berkshire Hathaway. In which that's pretty much what you want. You just things that only go up, and insurance is going nowhere. But Humana, having some nice down movement. You see, it's been a pretty big growing stock, but going down, and they're actually at nice levels around 240. So I might be looking to get this, depending on what they do. Obviously, they had some major drops throughout. I don't really know what's been happening, but just big drops. So I kind of got to do more research onto why Humana's going through some possible problems right now. So they're having a lot of like random drops and stuff. Kind of looks like they do that all the time. But yeah, could be a good space to look at it below 240. So that's all I have right now. I think there are other stocks that I just kind of forgot. But yeah, these are some of my long shares that I'm looking at to get more at, some possible levels I might be looking at. And yeah, if you like this video, get a thumbs up, like it as fast as you can. Make sure you subscribe, and do not buy or trade anything you see in this video. I'm not a financial advisor. So thank you. Have a great rest of your day.